By the way, at the end of this video, I'll also mention to you whether or not I'll be investing in this. Hey everyone, me Kevin here. This video is sponsored by Public. Go to metkevin.com/public to get up to $70 in totally free stocks, no payment for order flow, no selling of your data, and you can now buy or sell cryptocurrency. That's metkevin.com/public. Okay, folks, let's get right into this. The SEC is potentially going to allow a Bitcoin futures exchange-traded fund, something that Cathie Wood has applied for as well in recent weeks. And take a look at this. Upon the news or the publishing of this news from Bloomberg, we saw Bitcoin essentially gap right up from about $57,200 up about $2,000 to where we sit now, about $59,400. We did run to a high, folks, a recent high here of $60,002. Now, why is this so exciting? Well, because we are expecting a Bitcoin ETF to get approved in the future, and some folks see a Bitcoin futures ETF as the first step towards a more broad ETF. Now, futures is basically a contract, and we're going to talk about the difference between futures and options here, to purchase or sell a certain amount of cryptocurrency, in this case Bitcoin, in the future. Could really be any kind of commodity. It could be the S&P 500 futures, whatever, right? It's a promise to buy or sell a set amount of something in the future. And the SEC actually has a bulletin out on Bitcoin futures. Now, it's not specifically about Bitcoin futures in terms of an ETF, but this is from June 10th. And so some folks are referring to this bulletin as sort of maybe like, hey, like this was the heads up in the summer that maybe a Bitcoin futures ETF was going to be able to be approved. The one thing that's really neat about this is they mention here that in the United States, Bitcoin is a commodity, which is fascinating because a lot of folks see Bitcoin as a currency, which is treated differently as a commodity. And perhaps most importantly, people generally do not want cryptocurrency to be deemed a security because it opens you to a lot more regulation with the Securities and Exchange Commission, the SEC. And here they are literally saying it's not a security, in effect, or at least that's the way it's viewed now. But then this is just the SEC. This is just saying the way things are looked at right now. But either way, a lot of futures contracts are based on trading commodities. And folks see this as kind of the gateway drug, so to speak, of getting into an actual Bitcoin ETF and full-on cryptocurrency regulation. This is why Bitcoin jumped, because it's seen as very, very bullish. Now, why do we think that this Bitcoin ETF is going to get approved? Well, it's because of this right here. A Bloomberg article saying that according to people familiar with the matter, the SEC is not likely to block Bitcoin futures ETFs from starting to trade next week. And again, these are not Bitcoin ETFs where people could hold Bitcoin essentially directly through an exchange-traded fund, which would essentially mean being able to buy shares of Bitcoin on the stock market. That's different. This is being able to buy shares in futures contracts on the stock market, where somebody else is promising to buy or sell a certain amount of cryptocurrency. So a little bit of a differentiation there, but kind of good. Because the SEC, if they were super anti-crypto, could easily come in and block this. And it's very, very good that we're not seeing a block to this. It is definitely a step in the right direction. Now, what is futures, what is a futures contract, and how does that compare to maybe something we might be more familiar with, like an options contract? So an easy way to think about futures is that whatever you're promising to buy, you don't have an option to buy, you have a commitment to buy. That's why we call options options. When we buy a call option, we have the option, it's our choice, to actually buy the underlying stock, let's say, if we're talking about trading options for stocks. If you purchase a put, you have the option of making somebody else buy your shares at a certain price as long as that price is above what the current price is. So you have this choice as a buyer of option contracts to force somebody else to do something, to either sell you shares or to buy your shares. In the case of call options, you could force somebody to sell you shares. In the case of put options, you could force somebody to buy your shares at potentially a higher price, right? Or for calls, sell you something at a lower price. That's the point of options. But you don't have to. You don't have to get rid of your shares. You don't have to buy those shares if you don't want to. With a futures contract, you are committing to take delivery of whatever that contract is by the end date, if you still hold the contract by the end date. Now, you can trade futures contracts, but the downside of trading futures contracts is that unlike options contracts, futures contracts are what are known as marked to market every day. So, for example, if let's say you have a call option on GLD or gold, and you spend $3,000 in premium for the right to buy 1,000 shares of GLD for $168 on November 19th. Now, that's a $3,000 option you have to spend $168,000 on GLD, or the iShares Gold Fund, in the future. You only needed $3,000 for that contract. So if you get to the expiration date and you're like, I don't have the $168,000 to actually buy GLD at 168 times 1,000 shares, because you have 10 contracts of it, let's say, then that's okay. You are not obligated to buy the shares of GLD. You don't need the $168,000. You can have the option contracts, and if you don't want to buy, you can just let it expire or trade it away. The difference, though, with futures contracts is if you had a future contract to buy $168,000 worth of gold in the future, whether that's actual gold or shares of gold through some kind of fund, you are on a daily basis going to be required to stake a certain amount of capital to show that you are going to be capable of executing that purchase at the end. This is staking margin, and every single day your contract value gets marked to market. You don't have to stake the whole thing, but if all of a sudden the price of gold goes up a lot, you're going to have to keep putting money in, or otherwise you get margin called. Your option won't just expire worthless if you don't want it, or you just choose not to take the shares because even though you might be in the money, all of a sudden you just don't have the $168,000. It does not matter whether you were in the money or out of the money on expiration date. You have to buy that gold if you committed to buy that gold and you're holding the contract on that end date. So futures therefore carry a little bit more risk. See, as a buyer of that gold call contract, you're limited to a $3,000 risk. That's it. That's your limited risk. You could trade that all you want. If that money evaporates, oh well, you lose $3,000. That's your max risk. But your max risk with a futures contract is that gold, let's say, skyrockets, you promise to pay it, you are going to, and let's say gold doubles, you're going to have to come up with $330,000 to actually buy the gold or get rid of the contract, and you're going to have to deal with spending a lot of money. You're not just losing $3,000, you're losing way more potentially. And so futures contracts, therefore, a little bit more risky. Again, you're making the commitment to actually buy or sell something. You get mark to market on a daily basis, and there's a lot more risk in this. Sure, you could day trade these. A lot of people day trade futures, and then they don't want to hold them overnight because of that mark to market. But folks, keep in mind that whether you like futures or you like options, or quite frankly, you don't care about either of them, what happened here with the SEC and Bitcoin, at least what is rumored to be happening, is bullish for cryptocurrency. Remember that the SEC chairperson, Gary Gensler, says that regulation for cryptocurrency is like regulation for cars in the early 1900s. Before we had regulation, we didn't have seatbelts, we didn't have traffic lights. People were afraid to use cars because they were deemed dangerous. People were unfamiliar with them. When we got regulation, people learned about using blinkers, people were required to use blinkers and brake lights, and we had stop signs and traffic lights and seatbelts. All these things slowly came out as innovations. Not necessarily in that order. But anyway, people then became a lot more comfortable with driving vehicles, and therefore vehicles exploded in popularity. And people believe that same explosion in popularity could happen in cryptocurrency if we finally get some modest regulation. Certainly we don't want China-level regulation where everything is getting banned. All right, now what do we think price-wise, and is this something that I'll actually invest in? So price-wise, first of all, for Bitcoin, this is bullish. When we actually get formal approval, I would expect that this is not actually going to be a buy the rumor, sell the news. This is going to be a buy the rumor, buy the news. I would expect that cryptocurrencies will do well when this gets formally approved because this is just a rumor. Obviously, if it doesn't get approved, we could see some temporary weakness in cryptocurrency, but it would just be temporary. We're on a nice trend, a nice upward trend right now. I added some more cryptocurrency yesterday and bought so right as this news came out, within like the first minute of this news coming out. So I was able to get a good price. I was able to send an alert to everyone in the Stocks and Psychology of Money group as well, where I send crypto notifications also. But now, going forward, what about a futures ETF? Would I buy a futures ETF? Probably not. For me, I'm not so interested in playing futures. I'm not as well versed in futures as I am in options. I would rather just hodl the actual Bitcoin. Now, I think the futures ETF could be interesting for some institutional investors, but I really don't think a lot of retail investors are going to get involved. And I maintain that the best way to buy cryptocurrency is just go to something like Coinbase.com and buy the cryptocurrency, maybe transfer it to BlockFi, where if you transfer money to BlockFi, by the way, you could get up to $250 totally for free for doing so, up to $250 for free by going to BlockFi. Go to metkevin.com/BF to get that affiliate referral opportunity. So again, metkevin.com/BF to get up to $250 in free cryptocurrency. And there you could earn yields on your cryptocurrency for just parking it there with BlockFi and allowing them to lend it out. That's why you earn the yield. But yeah, for me, I'm a big fan. Buy and hodl right now. And this is nothing more than a positive catalyst that will lead the way to more, ideally, positive regulation for cryptocurrency. So there you have it. Thank you so much for watching this video. Make sure to go to metkevin.com/public to get up to $70 in free stock, and you can now buy or sell cryptocurrency. Thank you so much for watching this video, and folks, we'll see you in the next one. Bye.